Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have John Quealy, Chief Investment Officer at Trillium Asset Management, for his outlook on what to expect for 2023. John, it's great to have you with us. Welcome to Trade Talks.
Yeah, good afternoon. Thanks for having me.
And I guess the key question is, when we think about a recession, is it priced in for any point at 2023, even early 2024? Is that in the market yet?
It certainly doesn't seem it. Corporate earnings will still remain variable, much to the downside in our view. For example, Bloomberg estimates the probability of recession at just about 62%. Unemployment will increase as the recession takes hold. When you look at some of the other metrics you track, U.S. Treasury yields, curves inverted, you're seeing S&P earnings estimates still fairly high for 2024. It's very unlikely to see that bounce back that quickly, given what the Fed is focused on. So yes, to answer your question, we don't think the recession is priced in equities at present.
John, are you seeing any signs of softening inflation? And what about what's happening outside of the U.S. as it relates to inflation?
Yeah, certainly there's divergent data points with inflationary data here in the United States, and consumers and all of us have to deal with more of this variability. Here in the U.S., we're seeing some good signs of disinflation. Think about the consumer discretionary sector and retail inventories. You certainly start to see some of that, especially in the holiday season, as many of us look to purchase gifts. But on the other hand, we're starting to see the lagging effects of utility bills in the United States. Gasoline, obviously noted previously, but for the most part, you're seeing pockets of disinflation, but other pieces, mortgages, rents, household equivalencies, still lagging, and that will take full impact in the 23, early 24 period. To your point, outside of the United States, much different picture, less monetary and fiscal policy capabilities in some of those countries. Certainly energy is a very persistent issue, not only for utility bills, but now we're starting to see manufacturers and industries think about how do you actually get supply. They'll be more familiar with the term force majeure, as they literally may or may not have enough energy to produce. And so that is going to be a tougher picture on inflation in our view to start 2023.
And I know at Trillium you don't have clients in crypto, but it is a big conversation in the marketplace. Where do you see demand implications from the crypto fallout?
Yeah, that's correct. We don't invest in crypto. We don't see the business case for it. However, when you look at the supply chain in semiconductors, semiconductor capital equipment, those effects, in our view, have been much, for the most part, priced in to equities around the crypto fallout, and what we're going to see in consolidation and perhaps more regulation in the coming years for crypto. Underneath that, however, semiconductors remain very favorable for us. Secular demand from analog to digital, centralized to edge, electric vehicles, really just a whole host of secular drivers that keep us more attractive, more tilted towards semiconductors. But certainly crypto has taken a dent out of valuations in near-term expectations in that group.
John, why do you think we will see more deliberate buy-sell decisions in 2023?
Well, a couple of things. One, we talked about the macro as we're seeing company-specific approaches to guidance. We're seeing company-specific changes in management. We're seeing that in some high-profile and some less high-profile cases where some management teams are, quite frankly, exhausted from almost 3 years of pandemic-related issues. Plus inflation, plus employment, getting enough people in the office or not, or enough qualified people to run their business. So we're starting to see some management teams fatigue in self-select or not. And that is traditionally an important time to reassess your positions by company. Is the thesis intact? Is the management integrity intact? Is the board oversight there? A lot of things we do in ESG around board oversight. So these are one of the characteristics we're looking for, and that is one of the things in 2023 we think will be elevated, management team turnover.
Interesting. All right, John, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks very much.